what are the metrics for judging a valuation? Like, what are the key parameters that you look at?
So public company अगर होगी तो अपने we might have heard price to earnings or EV to EBITDA, which is based on profitability. Early stage startups, mainly they go on a revenue multiple. Whatever is your revenues, a certain multiple of that, right? So revenue multiple, you can pick it up from any public company. So agar consumer space hai and revenue is 3 times, or your valuation is 3 times revenues, done, right? You know it's 3 times is the valuation. अब आपका जो भी TAM है, उसमें आपका जो भी market share है, let's say that comes up to 100 crores, your valuation should be 300 crores. But not today. Your valuation is 300 crores after 5 years. Because you will grab that much share after 5 years. All you have to do is, from today till wahan, जाने का risk कितना है? Your time risk, discounted by that percentage. Generally, at our stage, we discount it by 30%.
Okay.
अगर मेरे को 30% year on year return नहीं मिल रहा है, this is a bad investment for me.
Okay.
So 300 crores after 5 years, discounted by 30%, 70, 80 crores is the valuation today. That's how you justify that, right?
Okay. Somebody is at a seed or pre-seed stage. They don't have any revenue to show, right?
So many times what can happen is एक minimalistic valuation 5 या 10 crore का हो जाता है. Many times at that stage, it can be a non-priced round.
Non-priced.
What does that mean? I'm giving you 1 CR. The valuation is not yet set. When the next valuation gets set, जहाँ revenue visibility मिलेगी, उससे 20% discount में I'll allocate shares to you, right? So it's not a price round because I don't know how to price it, right? So we can do a non-priced round which comes at a discount to the next round where pricing can happen because then you have visibility of revenues. Many times वो भी होता है. Yeah.
So do you think it is prudent for startup founders to raise money at a pre-seed or seed round?
They have to, no? नहीं तो how do you fund the product creation? More often than not, they reach out to family and friends. That's the first line of attack for them. And even if they raise it, either they'll not price it or they price it at 5-10 CR and kind of raise that initial 40-50 lakh rupees, right? Just to get started. And then you kind of offshoot from there at a higher valuation.
Okay. And the discount rate that you mentioned, that 30%, 20%, do you think it gets, lowered once the company is mature?
Yes, definitely. No. So agar at seed stage hai, so we will possibly apply a 40% discount because there's more risk. At private equity stage, it's only 15% because now product is fit, the market is almost established. All I need money is to go ahead and expand into different regions, right? So at that time, 15-20% is a good expectation in terms of returns. So it's what you call as IRR. So at the private equity stage, your IRR is usually 15-20%. At the VC stage, if you're not making 25-30% IRR, you're taking the risk, you're not being rewarded.